Alrighty, let's get going here. Welcome to the May 10th, 2023 stock pre-market observation. Right off the bat, TOT. I was not around yesterday near the end of the trading hours after 3 to take advantage of the silly decline of TOT down to 103. But if you did, congratulations. I think, well, this stream today, this morning, is going to be very short, in my opinion, because the last week has been mostly anticipation of the CPI number that's coming out today. So depending on what the number is, if it's not hot, I think the market will be okay because then the market will, of course, refocus back into the Fed and what they're gonna do. I still gonna do the same thing. Sell put spread 102. Yesterday I did sell a few more 102 100 put spread, and depend on where TOT is and what kind of credits that spread can have, I will do more. It might even go down to 101.99 spread if there is a further decline into the 102.5 range, which is the gap fill, right? So we're in a very tight trading range. Ever since we had this gap up, we have flirted with the gap fill last week, and it can happen. Now, as far as my 2 cents on the debt ceiling fear is, I can't remember how many times I have heard this. Okay, the politician is going to trying to wrestle each other to trying to squeeze pork into any kind of bills or whatever. Okay, they do this every time. The closest I believe that we got was, well, there has been a few times that I can recall where they raise the debt limit temporarily or whatever they want to call it, and then pass a bigger bill later. That have happened many times. At the end of the day, they don't have a choice, and this is one of the many problems that we have with the Fed. Is the Fed is trying to tighten the economy, slow down the economy, stop the money printing, and of course the government is doing the opposite. So when you have policies that are not in line, it's hard for the Fed to fight inflation because the government is issuing money, printing money, and make no mistake, raising the debt ceiling is printing money, no matter how you want to look at it. All right, so for now, TOT, I'm fine with it here. It's nothing to worry. It's trading a very tight range of about 5%, basically 103 to 108. Can that range change a little bit? Sure, but I'm not concerned. If you are concerned with TOT here, maybe you should not be in the stock market at all. Let's go to the VIX. All right, so the VIX is certainly coming off the low, right? But it's not high. It has plenty of room to run because as fearful as the market is of the debt ceiling and the Fed, we are not fearful. Okay, the VIX say otherwise. We are not fearful. So when the VIX is not fearful, you should be fearful. And what I have been doing is put spread on VXX. Okay, on any kind of decline below 38, I will be selling 37 or 36 spread below. Why not? Okay, why not take advantage of the easy money out, as I would call it, on the VXX, since I can't really buy the VIX. It's not the same, not exactly the same. It's not a one-to-one correlation as far as movement of VXX and VIX, but that's one way to buy protection. All right, take a look real quick at the indices. Okay, QQQ. Yeah, I wouldn't be buying the QQQ here. Okay, if you want to buy short like the QID, SQQQ, I think it's a better spot to do it. Once again, let me remind the same message I said Sunday, is that earnings season is mostly behind us now. So the catalysts to move things higher are going away, right? Um, Earnings season was not ugly. It was ugly for some, good for some, but overall, the tone is eh, depending on the sector, right? If you're talking about consumer staples, earning was great, guidance was up. Oh, on top of that, um, the dollar has been down, which is a good thing, a tailwind for many multinationals. So SPY, the same thing here. I don't see anything to get excited on the SPY. We're near the top range, barely hanging on the 20 MA. Can we get down to the 50 MA in a hurry? Yeah. Okay. If you have it, set your stop, sell cover calls, do something to protect your position, because I just don't see like a what would be the reason for a breakout over this range. I don't know. You tell me. I don't know. Let's talk about the dollar real quick. Something I have not talked about. Look, the dollar is literally near the 52-week low. Remember going into last year, we're talking about what I talk about, the strength of the dollar hurting companies earning, and we heard plenty of that in the first 6 months of the year, right? If you go back 12 months, the early 6 months of the year, you heard a lot of headwind with currency, and then you start to hear less of that. And I can tell you right now, it's not going to be one company in the second quarter, that talk about currency problem. I don't think I hear much currency problem in most of the earning calls this past 2 weeks. So that trend continue. If anything, it's even better, because if you go back year over year, starting in April, guess what? We are below, okay, where the dollar was. So for now, the dollar is helping. USO, not much to say. Okay, if you take advantage of USO when it was 63, congratulations, right? I saw a couple puts. I had to roll a couple one, but those should expire worthless, because the spread I was doing was 60.56, so that's gone. If you have it, perhaps trim into 66, 67, right? For sure, 69. If not, sell all out, right? They don't be greedy. And if you hold some still, you know what I say, 70 to 71, it's time to go. Oxy. Would I sell Oxy put spread on a decline if I see a decline? And the 56, 53 put spread have enough juice, I would sell, just like I did last week. Last week, that's what I did. I sold on the decline here last Wednesday and Thursday. I sold a few 59, 56 put spread. No, my bad. 56, 53 put spread. And I will do the same. They should expire worthless in 2 days. ELV, time to go, right? We've been trading the healthcare sector for the most part on the right side of the trade. It was great to buy last week on a dump. Now at resistant, right? You get the 20 and the 50 MA rejecting. Look, it's clear that ELV is having a hard time clearing the two moving average, even with great earning. Don't forget ELV, United Healthcare, they all had fantastic earning, okay? Fantastic. And they look at all this week. 1, 2, 3, for. Look, it's clear, right? So if you have UNH, if you still hold UNH, no doubt have your sell order 498 to 500. Okay, the last 2 weeks show you clearly that there are sellers stepping in. Each time it's getting in that range. So if you buy down here, if you buy 485, is it so bad to sell it at 498 or higher? No. Take your $10 gain. Take your 2%, 3% gain. For me, the safer play is sell put spread at the gap fill, 475, 465. Okay, that's how I played the last 2 weeks. I sell a lot of puts down here. Would I buy share outright if they fill the gap? Yeah. CI, I don't have anything anymore. I thought that was the one with the big potential for the past couple of weeks, and it plays out. That's one. Okay, earning came out. Unlike UNH and ELV, it went higher and stayed strong. So unlike other healthcare, that one did good. Now the one that I add this week is DGX. I added yesterday. I added Monday as well. I think the lowest I got was 133 something. My average is around 134-ish, so not a lot. I've been adding very small Monday and Tuesday, but I'm trying to sell puts spread where 130, 125. This stock trade so thinly in option that it's very hard to sell put spread, but I keep throwing out orders every day in case it happens. I'm sure it will happen if DGX get down below 133. I think in the 132 range, then there will be some put action at 130 and below, because then fear will creep in and some people will start selling and buying puts, and I think I have a better chance to get a put spread order in if it break into the 132 range. And I will add shares. Okay, I add share last time it was down here. That was a right thing to do. I will do the same. Scale in position. I will very likely double down at this support here, like 132. You bet. 132, I will take my 20 share up to 50 or 100. I might even triple down. Okay, so right now it's very small. I have literally 20 shares, not a big deal. But that's the way to play it. If you get down here, like last time, oh, then you see, me putting in 200, 300 shares as far as holding. So for now, just 20. That's ready to go to 40 or 50 in a hurry, and then to 100 in a hurry. So no reason to pile in big early. Buy small, buy often. Meta, it's, I think, very likely that it will test the 20 MA. Okay, it already give up that big gap. Okay, yeah, I trim, I sell put spread, and I'm looking to sell more put spread where 210. Okay, 210, 200. I think that's a good area. Even better, if 205 have any kind of premium for next week, then 205, 195, something like that. Because then you have the 20 and the 50 protecting you. Okay, so you have two level of protection above. So if you can do, if 205 have any kind of premium, which I don't believe so, it's very, very little. I think 210 has enough premium to make it attractive to sell some, but 205 is way too far, way too far. Microsoft, what more do you want? It's time to go. It's been time to go for the past week. Google, I sold cover calls. I have cover calls at 111, 112, and 114. I took the pop yesterday to sell the 114. Pretty happy that I did that. I'm sure all three will expire worthless, but I will keep selling cover calls in that range, okay? Um, Between 110, no, 111, because it will flirt with 110, but I think 111 to 115, if there's premium, is worth selling cover calls up there, and nothing wrong with that. Tesla raising prices in China. Would I buy Tesla here? No, but if you long Tesla, make sure you have ordered in to trim on the gap fill at 177-ish, right? You should set a trim there and then trim above at 180. Look at the 50 MA, okay? Look, the 50 MA reject. What would be the reason for Tesla to break over the 50 MA and the bull trend return? I don't know. I don't know. They're raising prices, which is not a bad thing. No doubt that deserve the reversal of this flat line down here, but no, nothing to get too excited over there. Let's touch on the one that has been a struggle, Lockheed Martin. Okay, so for me, I've been selling put spread where 445. Okay, I have put spread as high as 447, 450. I have a few at 450, a few at 447.5, and a whole bunch more at 445. I believe part of this weakness here is the problem with the budget, because where can the government cut spending or reduce spending in order for the Republican to agree to raising the debt ceiling limit? Where is one area that it can do that? Military. Okay, yes, it should be obvious for everyone why that is, but do I think that we are not going to keep spending on military? The answer is no. We will keep spending, and I think if you have patience and sell put spread below, once the bill is passed and it's clear how much money will be allocated to the military, you will see the return of the bull trend in Lockheed Martin. But that's my take on what's going on with the weakness there. All right, I have no idea where the reduced spending is as far as what the government will do and agree, but I don't think it's going to be on military, especially when Congress is all gung-ho on sending more money and more weapons to Ukraine. Have you heard anyone in Washington talking about let's stop the war, let's negotiate a peace? No, not yet. Let's take a look at some healthcare. Eli Lilly, I still have my share, not selling them. No need to add to them. Do I think Eli Lilly is going to drift sideways? Very likely. Very likely. Sideways. If put spread at 390 and below have enough premium, I think the one area that I would put more money into Eli Lilly is sell put spread or do a bull call spread above. So depend on how things play out the next week, the next few days, I might do something like that. Do a bull call spread on Eli Lilly. Maybe, just maybe, right? Let's see. Amgen, which I have been selling put spread as well at the 230 and below. Yeah, I like Amgen here. Would I sell more put spread at 227.5 and below? Yes. If there's enough premium for next week, yes. The strong area of support, okay? We're in that range. Remember, support and resistance is often a range, not just one price area, okay? So between 229 and 223. That's the range. Okay, so for me, if 225, 215 put spread have enough juice, that's great. I would do that without worry. Okay, I like that. So yeah, I like Amgen down here. JSK still kind of going sideways. This is fine. Would I add more? I have ordered in to buy back what I sold above 38. Where? Down here. It has to get down to the 50 MA for me to buy those things back. Otherwise, I might consider selling 35, 33 put spread. I think that is a decent area to sell put spread using the 100 and the 50 as my protectors. For FV, struggle. FV has struggled. Same thing here. Okay, I have been out of FV since, I'm trying to remember, I think the last time that I was long any share of FV was somewhere here. If not, the rest was gone here. Okay, I missed this further run from 155 to 165. I was not there. But I'm also not there to see it go down to 145 where it is. For me, put spread where? 143, okay? 143, 140. Because that's the reference low right here, 143, right? I'm using that as well as this trend line. I'm not sure where this trend line come from. Let's peer back in the past. 3-year chart. I guess that's the line that where the pandemic low, I guess, and then it support here, and then go all the way to here. So yeah, the long term 100 weekly moving average is around 140-ish. Okay, so that's where potentially down here. Okay, but to me 143, 140 is low enough for me to risk at this point. But worst case scenario, down here. Look, support. Okay, so worst case scenario, if you want to be patient, anything into the 135 area is when I will buy share outright. Otherwise, I just do put spread down here. I will play the put spread in this area between 143 and 135. And patiently wait in case there is a dump down to 135. Can it happen? Maybe. But no reason to be more bullish on FV for now. As far as staple, what is there to like with staple? Okay, Pepsi continue to grind slowly higher. I've been saying for 2 weeks, ever since it touched this right here, I said it's time to go, right? So if you're in it, congratulations, but set your stop. Coke, well, I sold up here. No regrets. And when will I buy back? 62-ish, right? Below 62, between 62 and 61 is the area that I would likely add the share back and then sell put spread at 60 and below. You use 60 and 58, kind of like a tight put spread in that range, yeah? But no need to be in Coke right now, no need to. McDonald's, I'm sure is strong. Nah, no need to be a McDonald's right now. If you have it, set your stop. You touched 52-week high yesterday. Chipotle ran out of steam, going sideways. We'll see if it can come down to the 20 MA. But I have no position. I bet short into earning. I was wrong. Lost money there. Chipotle and let's take a look at big box retail. Target. I like. Okay, I sold put spread 155 and below, 152.5 and below the past week and a half. They expire last week, and I have a few more that expire this week. So for me, I like it. Would I buy share outright if I see below 155? Yeah, I would buy a few share here and there between 154 and 152. I like that, right? But a better play is to just sell put spread at 152.5, 150. If there is enough premium for next week, go into next week. I think earning is next week, so be careful. I think earning is after next week. So once earning is here, so I think the premium will be better next week because it's heading into earning. Walmart, I like less because of where it is right now. It's time to go. Okay, there is no the risk reward to have Walmart right now is the path of least resistance is more likely down. Okay, more likely down. So look, it's been here before. Ignore this crazy day because many stock had a crazy candle on that day. Something was wrong. But last time, rejection, struggle here. So for me, no need to be in Walmart, not right now. Costco, same thing, no need to be in it, none. The risk is the path of least resistance is down, okay? And I would rather wait for it to come down to the 100 MA. If it does, if I see below 490, then sell 475 put spread, 475, 465. Okay, that's the area that I would sell. And if it declines further, then do 460 or 475, 465. But no need to do anything here, none. I think that should be it for now. Let's wait until to see what the CPI data is. See you Sunday.